Hello traders, Gary Wagner here, 1:30 in Honolulu, 6:30 in New York on Wednesday, 16th day of February 2022, and this is the daily report for gold and silver. Yesterday's price decline of $12 was short-lived as today's gains more than recouped that drawdown, with gold gaining $15.30. That is 0.82%, with the April contract currently fixed at $1,871.50. Spot or Forex gold is currently fixed at $1,868.84. Silver had significant gains, over a 1% gain or 26 cents, with the March contract currently fixed at $23.60. A contributing factor to all of the precious metals having gains across the board was dollar weakness. The dollar index gave up 0.16% and is currently fixed at 95.84. Traders, this morning we did send out a trade alert. The reason that we have raised our stops multiple times over this last few days is that we unsuccessfully tested 1,880, which is the most recent top we have not taken out on a closing basis. Of course, we did take out the top that occurs at approximately 1,860. So because of that, what we are trying to do is to protect as much equity as we can, or profits in our current trade, if in fact we see gold rise to 1,880 and not take it out and then begin to back off. Traders, we raised our stop to 1,862. That is a very tight stop. We are looking at a 240-minute chart, but it puts it just below the low of this candle here. Our entry price remains firm and excellent, $1,790 per ounce. Maintain your current long position, raise your stops, and then maintain your new stop. This next chart is a daily chart, but in Henkin Ashi, or Japanese average format. We can see that as the market came down, we had excellent pivot candles, which were small-bodied green candles, and as this trend started to develop, we can see that we had a gradual increase in body size, although many of the candles, such as yesterday and today, did have lower wicks. We had a couple that had very, very nice body size and an absence of lower wicks. What that tells me is that the trend still has good momentum and good strength. This last candle here is simply looking at the open overseas, with gold currently trading at $1,872 per ounce. The last chart that I want to look at is a weekly chart with one possible model of where gold could trade to if it continues to trade higher. My assumption is that we concluded in intermediate 4. This is our intermediate 3, which occurs at 2,088 in terms of dollars, the highest value of gold to date. And then I believe we had a subcount behind that, this being a wave 1, and this long contracted correction that unfolded as a compression triangle being a wave 2. I believe that once we broke out, we got definitive confirmation that we did in fact enter a third wave in terms of our subcount. However, realize that with this subcount, we will get a 1, 2, 3, 4, and 5. So it's not going to be a straight path up. The question is, where could we see gold falter? The real level we want to see taken out, of course, is coming in at 1,880. If it exceeds that, the next target comes in at around 1,920. However, we could see a correction at any one of these two tops or before. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.